Good morning, everybody. It's Thursday, May 15th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Quickly here, overnight markets had July corn up 3 1/4 at 448 3/4. July soybeans were down 14 3/4 at 1063. And July Chicago wheat was up 5.5 at 530 1/4. This morning we had weekly export sales. Good solid week for old crop corn sales. 1,677,200. Upper end of the range was looking for 1.5. In line with for new crop 508,900. Soybeans, lower end of the estimates for old crop 282,400. In line with estimates for new crop 490,300. Wheat sales 58,600 for the old crop, solid on the new crop 746,200, as well above the upper end of the range for wheat. Meal sales 286,700 for old crop, 32,700 for new crop, and small oil sales 13,600 for the old crop, and just 500 there for the new crop. Good morning, guys. I think the main headlines here this morning, and obviously yesterday on yesterday evening's open, was really relative to the bean oil market. There was Zeldin was speaking to Congress, talked about I guess delaying the announcement on the RVO here for some more public comment. Had to limit down bean oil for a good portion of the session overnight. We did bounce off here on the close this morning, but certainly got into the bean complex there. So I guess, Justin, we talked about it before the show, but it's maddening how headline driven we are, and we can't get some sort of an announcement on this deal that seems to be worked out. So give us your thoughts, and then we'll throw around the room.
Yeah, I mean, I think I've talked about that a few times on the show. The fundamental possibilities are huge for soybean oil, and the reason I haven't traded it for months is because of this exact reason. You're at the whim of all this kind of crap, in my opinion. You're at the whim of politicians. It feels like insider type crap to me. Rumor mill. It's a very hard trade, and it's frustrating. Like I was telling you guys last night, like when, 2006, when the ethanol first RFS kind of came out, it was clear, 5-6+ year path of how much per year was going to be needed. Investors could, build plants, knew that we needed, basically a billion more bushels of corn every year to hit those targets. It was clear and defined, and this whole renewable diesel thing has been a debacle, my opinion. I mean, billions of investment, you get things going. There's these bills that last 1 or 2 years. Then you allow, use cooking oil. And then going into this yesterday, it looked like, okay, maybe we're getting some footing. You've got, legislation going through. You've got, bills that are being proposed with kind of common sense things. And then stuff like this happens. So it's got to be super frustrating. It's frustrating watching it as a non-participant. It's super frustrating for people that are, trading this specific market for sure.
Yeah. And I mean, a clear hangover into the bean market, right? I mean, it's
inevitable.
Obviously.
I mean, like beans have some, good fundamentals going on. If some good legislation were to pass, I think this sets beans up for a multi-year, underlying support. But again, politicians and lobbyists, it's kind of crazy, right? And then like, oh, we need a few more months to, really think about this. Like you've had years. Like it's ridiculous. So
yeah. Well, in a few more months, I mean, they want to talk about getting this bill through the House by Memorial Day and pass that. I mean, what's that tell you about the legislation overall?
it is ridiculous. I mean, whether you like the, Trump administration or not, you can tell that the people that are on there are business people trying to get deals done, trying to get real change made. Again, whether you like it or not, these are people that are successful business people. And then you look at our Congress and these politicians and realize how worthless they are. They're there to just, it's like attorneys when you're working on a contract and they delay it 5 months to earn fees, when you could just sit there and have a conversation and get it done.
True. What's on your mind this morning?
Me?
Yep, you're Ben.
We didn't hear you.
Can you hear me now?
Yep.
You know, the bean oil, big market, big moves. You get a chance to see what it's made of. Some of the bigger markets that we have, you see these massive pullbacks. Spec money gets really excited. We were talking before the show about cross commodity type of trades and spreads, and there's a pretty big one on right now with meal and oil. So I think that's an interesting part of this trade, and excited to see corn exports continue to be very strong. And I think that there's some optimism in the wheat market this morning. We saw a really good week of sales. So we'll see. I think we have a long way to go. It's mid-May.
Yeah, no doubt. Jace, what's on your mind with the markets? Where's your head at?
Volatility. I don't think there's a lot of threatening weather right now.
Mm-hmm.
It's all kind of ideal. So we've gotten a lot planted really quick. You go drive around, you see corn coming up perfectly. Right? As actually my father-in-law talked to me last night. I was at my daughter's softball game. He's like, God, it's been so dry here. The corn looks great. How's that possible? I'm like, it's kind of funny. We planted some good moisture, and actually this is kind of ideal for it to stress it out a little bit, right? Have a little bit of dry weather, get that plant kind of motivated to grow. And then we got really good rain forecasts. I think they even added more kind of coverage levels, for Tuesday next week. So just, I think if we continue to have just really good weather, without any news for trade, we kind of drift sideways to lower in corn would be my guess. Obviously the fundamentals that we talked about in the show are always looming overhead, right? If there's a problem, if there's a trade deal, all these things, so I'm just, you kind of sit back and watch, I guess. I don't have any immediate thoughts on direction. Like I said, I think we'll be trading weather for a while and just trading, fresh news. It's kind of a news driven market. So
yeah, outside of some of the fringe areas though, we're starting to hear more and more guys that are wrapping up or getting on the back stretch here pretty good at getting everything in, aren't you? Hearing that?
Yeah. A lot of guys are finished or finishing up. So off to a great start for the majority of the belt.
Yeah. Dustin, give us some thoughts this morning and then we'll put a bow on the green side.
Yeah, not to beat a dead horse here, but talking about this oil meal. So, we're measuring the value of oil as a percentage of crush. We're looking at oil share in blue here. So we hit the highest value of oil share to meal, oil share to meal since 2022 on yesterday's close. And then we get this news overnight. Like to Justin's point, like insider trading, 9,000 contracts immediately sold on the open, and you go on Twitter and everyone's asking what happened, right? So the rumors are that we're going to be, announcing less than the 5.25 billion gallons that we're kind of targeting to get to next year. So oil share drops. That's the blue line, but you can really see where the black line is crush margins. How oil has been driving this excessive crush margin number going into the new year. So you go to the WASDE report, and we're talking record crush. We've got increased crush capacity for this reason. Domestic soybean oil production was the financial incentive to get there. And, all of this was that extra enthusiasm in addition to a potential trade deal with China. So those kind of the over-the-top moves that we were getting for beans. I understand why we're over 12 cents lower in the overnight market for new crop beans. But I would still say we're still at very elevated margins, $1.77, even after last night's move, and the potential trade deal with China on the table and a rising real. So I wouldn't necessarily think this is the end-all be-all for beans necessarily, but just kind of highlighting how important oil has been for domestic crush margins.
Justin, you're nodding. Anything to add there before we
No, I agree. You know, it's been amazing that meal values have been able to hold in. You know, everyone likes to try to bottom pick meal. You know, there's a new, you know, again, subject to policy, which is so hard, but there's a paradigm shift that's been happening for years where oil share is just naturally going to be higher with these programs. And you know, looking at historical charts on relationships is just really tough because it's not it's something has changed, right? It's a different demand base, it's a whole new structure, and but you still have a lot of traders that trade off historical charts. And it's been amazing to me that, you know, with record South American production, um, all these different things with huge crush expansion in the US to, you know, to produce the oil feedstock, that meal values have been able to hold as well as they have and keep these crush margins high, right? Naturally, when you go expand crush by 20%, you would expect those margins to collapse, and that hasn't happened. So not only have we been able to get rid of the oil and bring in 4 billion pounds of used cooking oil at the same time, we've also been able to keep meal values from collapsing. So it's actually pretty impressive, you know, I think.
Mm-hmm.
So nope, that's
Very
all.
good. We got got a couple of minutes here. Ryland, big reversal in cattle's got everybody talking here this morning, and overall, I'd say a pretty quiet trade in hogs. So why don't you give us some thoughts before we wrap?
Yeah, the big sweeping key reversal from contract highs, closing on the previous session lows. So yeah, I mean, I think naturally you get a little bit of panic here this morning. I mean, anybody that's been long, it's been a gravy train. It's been a pretty easy trade, just considering it just keeps on going back up. But you know, we've seen this price action before several times. You know, in the past, just you know, you go back to March, and we've seen this before. Typically, this kind of overbought kind of blow off top precludes a $10 to $12 break in futures. Like I said, you look at the chart and you can see it pretty obviously that these breaks have been bought pretty aggressively. If we challenge some of these longer term moving averages, volume yesterday was absolutely massive. The range was massive. Open interest gained 8,200 contracts. I mean, like we're going to challenge these big prices at some point. I mean, if it's a top or the top, nobody really knows yet, but if this follows the same pattern, we'll break for a couple of weeks and then recover and blast to new highs. But the time frame obviously is a bit of a concern, just because I think everybody was hoping that this kind of action was going to happen in the next 2 to 4 weeks. But we really haven't seen anything on the cash side of the market yet. We saw a little bit of 216 bid, 222 offer yesterday. Just nobody's been able to meet in the middle. So we're going to see if the Packers going to try to take advantage of the lower board. I can't imagine that we're not going to see a pretty heavy sell-off this morning. So we'll see if those bids start coming in lower and if anybody's going to blink on that. So once again, it just feels like that's probably going to be the direction for a little bit. Would not be surprised to see a heavy amount of liquidation just over, into the weekend. This kind of price action, especially if we see cash able to actually get picked up on the lower side. So something to keep in mind, but all in all, beef prices were just a little bit mixed yesterday. So like there really wasn't just a big catalyst for it. We're looking at strictly technical price action, and that's probably what the market's going to focus on in the interim. But yeah, it looked like there was kind of a big roll happening. I mean, we did see a little bit of weakness on the hog side of things. I mean, obviously the carcass, everybody wants to see a nice little bump here, but we're just kind of hanging on. Carcass was at 97.14. It was up 12 cents. Bellies were down $1.17, and cash was just a little bit lower. So there just doesn't seem to be any real enthusiasm after the hog markets rallied here. And I think naturally, from the production side, you're going to get a pretty decent amount of hedging up here as well, now that you got these kind of premiums established on the board. So net sales were pretty good this morning in both places. So I think there is still some good news here to add some support, but obviously all eyes are going to be on cattle today, see how the price action shapes up and, see if we can hold up okay.
So Rylan, I had a question on this, and not a cattle expert, but kind of just looking at long-term charts, it's kind of interesting to me that we, from 2009 to 14, we basically had 5 years straight up.
Right.
And then we had the next 6 years straight down. And now
Right.
we've had 5 years straight up since 2020, almost to the date.
Right. And that's
So,
indicative of the cycle, you know. the
right. So, I
cattle-
mean, you have to think that we're certainly within 12 months of a top of a cycle.
Right. And I
Just
think
from
the
historical standpoint.
and that's been the big talking point right now, is if guys are retaining heifers or not. You could speak to both sides of the argument. Is it happening or isn't it? We'll know more in July once the semi-annual cattle inventory report comes out, just to kind of give us a glimpse if we actually are retaining replacement heifers and calving more, you know. So I think just in general, the pandemic definitely interrupted the natural kind of formation of the cycle, just because we had a massive sell-off. You know, I mean, like, we took futures down into, you know, sub 90 in some areas, you know, and packers had to run in and keep on paying up for cash, you know, $1.20 when margins were so bad, just because they realized that this was going to hurt the industry in its entirety. So that kind of put this big damper interruption, maybe pushed this cycle out a little bit further than expected. But I mean, the projection right now is that we're really not going to see those numbers, that heifer retention, until next year. 2026 is really kind of that time frame that I think just most analysts would be shooting based on the public data. So, you know, we'll see if maybe it's happening earlier. I mean, obviously you needed prices higher and you needed to show profitability down the road to convince guys
Right.
to do this. And that's tough just because prices are so good now. We've heard this before. You know, it's hard not to take that sale now and just pocket the cash when you know that there's an inevitable break around the corner that's going to threaten your livelihood. Obviously, LRPs are going to change that game a little bit from just a safety net standpoint. Obviously, that's in the market now, and something we didn't have, you know, I would say in the previous cycle that was as widespread. So I think that is kind of a big dynamic change for the marketplace as far as just longer term longevity, especially when we get up to these prices where you can hedge at a profit in some areas, just with, or insuring yourself at a profit. So yeah, I mean, if you look at those charts, absolutely, you're gonna be like, well, that's when we're gonna top, and I'm just gonna, you know, roll all these longs into
Yeah, well,
shorts.
I'm guessing, you know, just like in the row crop markets, right? Like when you're making the highs, it's the most bullish, right?
Right.
Like, you know, you don't, in hindsight, where you realize that there was expansion or something. But
Right. And that's how this is going to go. You know, it's a futures market. I mean, the market always knows. Even if we get just an inclination that this is happening, we're going to trade it right now, a year out. You know, that's just the way it's going to be. You can't help it. So, I mean, whether that's right or wrong, you know, hindsight and time will tell kind of thing. But I mean, obviously, like, we've had a really unchallenged rally for a couple of years now. And we finally see a, you know, actual defining topping kind of action. I mean, like I said, I don't know if it's the top or a top, but yeah, this is going to cause a little bit of panic, and there's a lot of money on the long side of the market. But an equal, I mean, I would argue that there is a safety net here, you know, for most producers that just wasn't there in past cycles.
All right, very good, guys. Rylan, appreciate the update there. Good comments. We just came into the open. We got July corns up 4 cents now, 4.49 and a quarter is the last there. July beans are down 17 and a quarter at 10.60 and a quarter is the last. And July Chicago wheat's up 5 at 5.29 and a half. We're gonna have Nopa Crush out at 11 o'clock today, looking for a number estimate close to 184.6. So we'll take a look there and certainly visit about that in tomorrow's War Room. Also, tomorrow is Friday, so we will be back with Fun Fact Friday. Brian will be ready to go, and you never know what you're going to get. So be sure to tune in. It's always fun. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com. Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.